Your journey with us has been particularly impressive. So I just wanted to ask you a few questions about that because I'm fascinated to know about how you've been working and how you've been trading. And you've passed this level one. It's a 90k DX trade evaluation account. You're now funded into level two with the full 90k, and you've done it in 45 trades. That's really, really impressive. Just talk me a little bit about the problems that you had before you started this account, and then what led into actually sort of like managing to carve this account into such an impressive equity curve.
Pretty much my approach was to follow the trend on when I identified the trend on a particular pair
Mm-hmm.
and kind of set my trade to a 1-4 ratio.
Okay.
Um, Kind of just hold it.
I mean, it's a very interesting equity curve. I'm just looking at your equity curve right now, and it is particularly impressive the way that you've managed to. I think your actual drawdown on the account from the start when you started it, the 12th of May it was, the most you were drawn down was I think just over 2%. Which is phenomenal, really,
Yeah.
to hold it like that and then recover from that. Because I think that would the lowest point was at the end of May, the 29th of May, and then from there you then sort of picked up the trend. You managed to then row in and out of the trades, and you just gracefully, just like a plane gliding up to the target. It's really there's very little variation in the scope of that equity
But like
curve.
I said, I don't trade a lot though.
Yeah.
I don't trade every day with this strategy either.
I mean, it's definitely a question
I
like less is more, isn't it? In that sense.
in my yeah,
Mm.
yes, that's more, I that's yeah, I don't take a lot of trades with this strategy.
Hmm.
I just make sure really try to identify a strong trend,
Hmm.
and then I set my risk reward to like a 1-4,
Hmm.
and I enter the trade, and then I kind of I set my trade manager to just just let the trade run its course,
Mm.
and I kind of wait. I kind of wait till I get to a 1-2 before I actually take profit. Um,
Okay.
and then yeah, I just kind of just go from there.
I'm fascinated to where that kind of beautiful equity curve can be created because it makes it look effortless, but obviously these things are not easy at all, and you've clearly been on a journey with us to get to this point. But just take me back to the beginning. When did you get started in trading, and why, and what was your routine? Because everybody's story is always slightly different.
I started trading really got into FX about 2015. I joined a US based company. I took their courses. I learned different different methods, Fibs, um, EAs, different EAs to use. I learned about the EMAs, RSIs. I
Mhm.
took the course there, and from there, kind of hit. I took my lumps with it, trading different things,
Mhm.
trading different demos off and on, and then when really the prop prop firms start really popping off is when I really started trying to zone in on exactly what I wanted to do. Because
Mhm.
initially I wanted to just trade with EAs and kind of let them navigate through the markets. But those EAs are good when this recurring thing came to mind. Like EAs are good when you have a trend,
Yeah.
and you set them
Yeah.
set them to follow the trend.
Yeah.
Um,
But they all go through losing periods as well. That's what a lot of
and they
people, a
go
lot of
through
traders
and their
don't
equity,
see.
and sometimes their drawdowns
Huge.
are not
Yeah.
are can be really really bad, and they
Yeah.
really don't work for certain prop firms.
Yeah.
And so I went through all the the ups and downs and trying to figure it out. Um, Lost a bunch of challenges. I've won challenges. At the beginning, for me, it was like, oh wow, I got these prop firms. It was almost like a gold rush. Like I want to get as many accounts as I can. But after a while losing challenges, I realized like, look, I have to first set a mindset to myself, and discipline myself on how markets really work. And one piece of advice I got from a coach the my in my training courses was the trend is your friend until it bends.
Yeah.
So um so I just kind of stuck to that and be like, look, if a if you see a chart going this way, trade. If you see a chart going this way, try to trade it. If you see a chart going like this, stay out.
Yeah. Yeah.
Yeah.
Well, it's kind of weird, isn't it? But those sort of
Yeah.
simple concepts, it's surprising how many traders forget those, and they try to sort of
Yeah.
like get too caught up in the minutia. Whereas if you just step out a little bit and you see that you've got an overall bullish picture, you've got to somehow just join in with that. And from a probability point of view, you actually stand a much higher chance of being on the right side of the market just
And
by
also,
following that.
yes, and also you got to know when is a good time to get in.
Yeah.
You don't want to go in before news.
Mm-hmm.
Kind of don't want to go in before weekends. You kind of want to go when the trend could continue.
Yes.
And that's kind of my thought process too. So I don't trade a pair if I know that a news event is going to hit within an hour or two. So that's one of the rules I have for myself.
Okay, so in that case, let me just dig into that then a little bit, because if you're gonna see like a CPI print coming up towards you, but you think that the setup is perfect, you decide that you're gonna see that you're gonna.
I'm out.
That's it. Wait for the next opportunity. Is that how you view it?
Yep.
Wow, that's really strong discipline. Where do you get that kind of sense of internal discipline from?
Trial and error.
Yeah.
Because I've done it. I've got into a trade and I was like, oh, I'm going to get in this trade and I'm thinking like if the news is in my favor, I'll hit my take profit quickly.
Mm.
And if it goes down enough, I'll just set my trade to a break even and I won't be affected.
Yeah.
Nope. I got in and boom, it stopped me out.
Yeah.
Oh, what happened to my break even? All the slippage or something happened.
Yeah. Well, those are the market dynamics that so many people miss all the time. It's very controlled, that kind of way of doing things. But how do you then? I mean, because obviously, analyzing the market is one thing. Knowing when to enter the market is another, but you touched a little bit before on your exits as well. Just talk me through about how you know that, because once you're in and it starts working, if you're on the right side of the market, the temptation to just make every emotional reaction based on the P&L is incredibly strong. So once you're in that trade, how do you then think about that next step? How do you then get to that point where you think, okay, now's the time to take some money off the table? How do you run it?
Well, like I said, every time I go into a trade, I know what I'm looking for. Like it is about discipline. I trade with a risk reward to 1 to 4, and I don't take profit until I get to 1 2. I don't. Mm-hmm. I mean, I set a break even when I get to 1 1. I set my trade to a break even, but I don't take profit because I understand the power of a good risk to reward.
Yeah.
So and that's why my equity curve is in that diameter, because I don't look to take any profit until I have got into about a 1 2 or so on the trade.
You see, that's a really powerful aspect of trend trading, because it's often forgotten that once you're in that trend, people forget that the idea of being the trend is that the trend can keep going. The market can keep going because it's trending. But then they're very, very quick to then just grab some money off the table, which is obviously a component of prospect theory. So that's very, very impressive the way that you managed to do that. Let's talk a little bit as well, and just include in there a little bit about how you then manage your risk. You just mentioned that you do you set your stop loss then to break even once you get a 1-to-1? Is that how you do it, or a 2-to-1? Did you say?
Well, I usually always risk about 0.5%, or I don't usually go higher than that.
Mm-hmm.
So I usually set my stop loss for like a 0.5% of the balance, and then I try to go for a 1-4.
Mm-hmm.
And then once the trade goes in my favor, I wait, I let it go. And once it gets to a 1-1 is when I break even. I don't take anything off the table at that point. I just set it to a 1-1. And then from there, I just let it go from there. And once it gets to a 1-2 is when I'll take some profit.
And that obviously that works beautifully, because the analysis must dovetail very nicely with that very simple form of risk management, because your win rate is 51%, your losing rate is 49%, so you're very, very evenly balanced, but yet your expectancy is very, very impressive indeed. Let me just double
I
check
don't
that.
really, like I said, I don't really look at the win rate. And I don't strive to get a win rate of 80%,
Mm-hmm.
because I think that's where most traders or other people think that that's a signal of winning. I be, I was told and I was taught, and I believe strongly, is like, if you got a good risk to reward, because you're going to lose trades.
Yeah, you
Like
are.
you are you're going to lose. Like it's don't that's the nature of the beast.
Yeah, yeah.
But understanding that when you win, you have to win more than what you lose.
Yeah, yeah.
That's and if you do that, um, you'll be in the good you'll be in good shape.
Yeah, it's outstanding. It's really good. With an expectancy then of $31, expectancy of $31.03, which is very, very high indeed. So it's very well put together as a trading account. I want to just move on to talk a little bit about your choice of asset classes as well. Again, you're a gold trader. That's very, very popular asset for people to trade. But also you've got quite a small basket of FX pairs in there as well. There's no indices in there. There's no commodities. You've got, on this particular account, you've got gold, the pound against the yen, the euro against the Swiss franc, the Canadian dollar against the Swiss franc, the pound against the Australian dollar. It's small. It's a small basket. What is it the attraction for you with FX specifically?
Really, like I said, it's funny you say that, because I really am. I want to trade the US 30 and Nasdaq.
Okay.
Here shortly. I may not trade it on this account, but I do trade the US 30 and Nasdaq. Um, uh, I kind of like how those move, and I like how those, especially in the New York session,
Yeah.
they definitely can move. But at the same time, they can be a little erratic at times. But once you have identified the direction of like the US 30 in a day, you're good. You're golden. But back to your question, I look at all major Forex pairs for trends.
Okay.
I look at all of them, and the ones that have the ones that clearly show a bearish bias or a bullish bias, especially in the long term, because I look at the 4-hour chart, I look at the daily charts, and then I usually look for stop losses at the 15-minute or 10-minute, but I usually trade the 1 hour.
Mm.
But once I once I see a nice trend developing or in a trend, and I can see that it might go a while,
Yep.
then I jump on it.
Yeah, yeah. So you're using a good use of multi-time frame analysis there as well. You're using the bigger time frames to help you define that trend, and then the intraday times for the execution, and then even the really small time frames for your risk management. So you're using a very very disciplined blend. You're not one of these traders that's ended up gravitating towards a 5-minute candle and just buying and selling on the latest current move in the market.
No, no. Like I said, my approach is more of a swing trade.
Mm.
And then like I plan whenever I get into a trend, I'm usually thinking I'm going to be in this trade for at least a day or two.
Okay, so you have a mental projection of where you expect the market to go in terms of time as well as where you're looking for in direction.
Right. My that's my expectancy. I'm thinking that I get into this trade. I know that I'm not going to get out of here. I'm not getting out this trade right away. Um, and I don't even look at the charts. Usually after I put in my when I enter my trade, set my stop losses and my risk reward, I usually don't come back to the chart for maybe a couple of hours.
Right. Right.
I don't like, yeah.
So there's a good sense of habit in there as well.
Yeah, I don't
really,
like to stare. I don't like to stare at the charts all day.
Do you work full time as well? Because sometimes that can help a lot of traders. The idea of being a day trader that you're just sat at home in the computer is not always that profitable. Sometimes for a lot of guys, having a job that they've got to then do on the side can actually be a benefit to their trading because it doesn't keep them welded to the market every minute of the day.
Yeah, I do. I think that's you make a good point. I actually own a restaurant.
Okay.
This is kind of more so another side business of mine. So yeah, I don't sit at the charts for the all days on end because I think most traders are I guess they are looking for the big, they're looking to try to maximize or make as much money as possible and this and that. I try to focus on being disciplined and not being not over trading and not being at the charts and not being greedy. So I plan my trade, I execute my trade, I shut the computer off and I go about my other things I do. And I come back.
Yeah, there's obviously a massive component of being a successful trader as well, which is not always obvious to everyone. One question that I'd love to ask you, and I'm really fascinated to know the answer, what are the hardest lessons that you've had to learn? This August, things will be changing at FTUK. You're going to see 3 major changes. A redesigned website that's easier to use and explains everything about how trading with us works in a simple, clear, transparent way. Completely restructured instant funding on one-step evaluation accounts that are designed to empower consistent traders and get you where you want to go fast. Finally, we're introducing a revolutionary new 2-step evaluation that offers leverage of up to 100 to 1 and requires no mandatory stop loss. And with a $10,000 account starting from just $99, we're making trading more accessible to anyone who wants to join the prop trading revolution and benefit from seeing their skills turned into real hard cash. So come and join thousands of the greatest minds in trading this August at ftuk.com. One question that I'd love to ask you, and I'm really fascinated to know the answer, what are the hardest lessons that you've had to learn?
Don't be greedy. Like don't try to, you know, don't try to. I've tried to pass challenges with one trade,
Yeah, that's common.
thinking like like, oh, this is going to go in my direction. I'm going to risk if the challenge calls for me to um if I have a daily loss of 4%, I'm going to risk 3%.
Mm.
So I don't hit the daily
Drawdown.
I'll break the rule,
Yeah.
And I'm going to try to knock this. I'm going to try to pass this challenge in one day, and all this stuff. I just think that's just kind of being I think there's a lack of discipline, trying to be a little bit too greedy,
Mm.
too risky.
Mm.
Um,
It's fascinating.
I,
Yeah.
it's
What do you say were the, because we have a community of thousands of traders. Are you think the biggest mistakes that most people make?
I've seen traders not use stop losses. I don't understand that. I think one mistake is you don't know what the market's going to do. I think stop losses are it's like driving a car without brakes. You like what are you doing?
Yeah.
Like you
Yeah.
don't know what, when, and where the market could turn at any given time. So
Yeah.
I think I think traders who trade with stop losses are are gamblers.
Yeah.
Are risk takers. They're daredevils.
Yeah.
And I would say which I think traders who are daredevils are the dangerous ones.
And what about your experience with FTUK? Because you've obviously been with us a while. So just how's your experience been with FTUK?
I have no issues. I like your I like the platform.
Mm-hmm.
So I like the fact that it's tailored to growth,
Yeah.
meaning if you are in fact um trading consistently and profitably, I like the scaling that it allows you to uh get to. And then I like the other options, the different trades, different instruments that you can use. So
Mm-hmm.
no issues.
Yeah. Good. Yeah, that's good. Well, definitely scaling is one of our big things, trying to get the consistent traders in that can manage their risk, work well in the market, keep reproducing what they're doing and moving forward, and you can then scale very quickly. So having someone like yourself that's just showing us how it's done is incredibly impressive. So I'm really grateful to be able to speak to you. We are starting like an elite trader group, and we'd like someone like yourself to be an ambassador for us, because of what you've done is absolutely amazing, and we want to support you in that journey as we then get you into that level one, and then
I never thought of myself of being an ambassador. I never thought of myself of being a coach.
Well, it's important. It's important because you've been doing it since 2015. So I've been trading for 16 years. So you do bank up an awful lot of experience, a lot of war wounds, a lot of scars, a lot of experience, some good stuff, some bad stuff, and that is how traders are forged. It's through going through the mill every day, guys like yourself. So when you start to succeed, that absolutely needs to be celebrated, because it's it's important for guys that are struggling to be able to see that when you do put the work in, you can actually sort of like achieve what it is that you want to achieve. Yeah, congratulations on passing the account in phenomenal style.
When I'm gonna get my credentials?
You'll be getting your credentials very, very soon. I promise you that. You'll be moving up there probably in the next 24 hours. So we'll get that out. I'll get the risk team. I don't do that myself. I'll get the risk team to sort all of those details out. And what we'll do is we'll then get that set up for you in the next day, and then you'll be good to go.